Welcome to the launch of the StatsEdge trading day trading systems. I'm very excited for this. I've been out of the day trading game for a long time, been dipping my toes back into it starting this year, and excited to share with you guys with what I got. Now, why was I out of the day trading game for so long and why am I coming back in? Well, I think that goes to the pros and the cons of day trading. Day trading, the pros of it is that if you develop a very small edge, you can exploit that small edge over and over and over again for potential outsized gains. That's the main benefit of day trading is, I have a 55% edge, and I'm just going to turn that over and over and over again, and then look back at the end of the year and have made some money. The downside is that it can be both mentally taxing, it can be taxing on your time, and it can be taxed on emotionally. So, I believe what I've done is given us the benefit of all the good sides of day trading, exploiting a small edge over and over again, and remove the emotional, time constraining, um, mentally taxing side of things. And I'll explain why and how here. So, this is the back test. Of course, past performance does not equal future results. This is the back test that we have going back 25 years. We've been beta testing this in the room now for a little bit, and the fills and everything are lining up perfectly. I have slippage and commission built into everything that I do. And you can see by the gray line, which is the back tested equity curve, fairly good. Not perfect all the time, not just like anything, but fairly good. Again, this is going to be one system combined with all the other stuff that we do, and each of these color line is an individual system. So we are trading these four systems together, and we're doing so for the purpose of the fact that when system A is underperforming, hopefully system B is doing very well. And when system B is underperforming, we have system C that's doing very well. And by combining all these things, the laggards that are bringing down our equity curves are hopefully outpaced by the leaders that are pulling up our equity curve. And that's what we are attempting to do here, is because as you can see with the back test, we have about a 53% edge and a little better than 1-to-1 risk reward ratio. So again, small edge exploited over and over and over and over again, every day, every month, every year, just robotically and systematically. So these are the four individual strategies. I'll go through what we're looking for. It's essentially two strategies, but both long and short on those individual strategies. And what we're trying to do is find strategies that are uncorrelated to each other because adding those together really, really, really helps. And that's, again, what we're trying to do here. And the combination is 32% year over year gain on our back test and about a 16% max drawdown. So what you could do is, if that 16% max drawdown's too much, you could lower it. If you're trying to get more juice, you could, increase the leverage on it, do things like that. That's obviously up to your own discretion. For me, what I'm going to do is because we just went through a crazy part in the market and the market was not moving in a favorable direction to us, but incredibly volatile, some of my systems shut down. I had a lot of cash just sitting there waiting for the market to recover. In those periods, I'm going to utilize all of that cash that I have. In periods that I'm fully invested, I'm going to utilize some of the margin because I'm out of these at the end of every day. I'd be okay utilizing a little bit of margin that I have on my account in order to trade those for, again, hopefully extra income that I could grow the account with and invest in more swing trades and underlying stocks. That's the idea behind that as well. So, four systems, none of which are exceptional, none of which are me discovering, the the hidden holy grail or anything like that. They each have a very small edge and they're built off a very sound trading and sound day trading principle, but you combine those together and then you have something that works out to be pretty exceptional in the combination of those things in aggregate as opposed to looking at them potentially individually. So, of the four systems, again, we have one that we're calling the second day play. And the idea behind this is that we are looking for a wide range bar yesterday. This is a daily chart. And that wide range bar, combined with a bunch of other indicators that I have, are showing that there's this big thrust in momentum. Well, we are looking for a pullback into that bar the next day for a buy, and then we sell at the close. It's important to note again that based off those back tests, we're splitting the portion that we have to day trading in our account buy 20. So each trade will be only 1/20th, and we will take up to 5 positions per system. So 5 of these second day longs, 5 second day lows, 5 ATR longs, 5 ATR lows. That's the way it's working there. However, we are going to be looking at many more positions than that because we don't know which 5 are going to trigger, of course. We have no way of knowing that. We are taking the first 5 that come in. I'll show you how we're going to deliver all this to you in what I think is an amazing, very simple way very, very soon. So that's one strategy. And then again, you can just think of this in reverse. We are looking for, on the other side, a dramatic down day that the stock is bouncing into, and we are shorting into that bounce to potentially have a move lower. The second is a overextended ATR play. So it's essentially, basically put, you're looking for something in this situation down 2 massive days in a row, and we are buying as it gets overextended from even that second day. So we are using daily bars to determine that this thing is oversold and potentially a buyer is going to come in. And then on top of that, we are bidding at a much lower price. So that has to even shoot lower from there to get in. Again, I'm highlighting the winners just to show you what they look like, but I fully disclose that, right, it's about 53-ish% win rate. So half of every of these trades roughly are going to lose. So how are we going to deliver these to you? Because as I mentioned, there will be a lot more symbols each day than the 20, right? There'll be up to 80 potential trades in 20 actual fills. So what's going to happen here is every day, every morning when I run the systems, I will be updating a spreadsheet. So the weekly email that comes out to all StatsEdge Pro members that has our swing trades and our investments and all of those systems that we have for longer term trading will include a link. That link will be good for the week, and then the next week there'll be a new link because I have no way to kind of kick people out of Google Docs. So that's just how I'm doing it. There'll be a link that's up outstanding. I will update that link every day throughout the week, and then the next week I'll delete that sheet, create a new sheet, and go from there. And it will have the actual strategies, the entry price, the stop loss price, or the stop loss distance. So from wherever the fill price is, what the distance is, the symbol, of course, and then the date that gets updated. That's if you want to do it yourself. But what I kind of recommend is go through the symbols yourself in the morning, familiarize yourself with potentially what triggers, maybe make some notes of which ones you like the best. But we have this Discord alert bot, and this is what I've been building in the back end, where it looks at my TradingView account, and from my TradingView account, it ends up sending, when the strategy has triggered, an alert to the Discord room. So if you're on your phone, if you're at your computer, if you're at work, whatever it is, it will ping you and say something like this: second day play short, symbol, price, stop loss, and then exit at the end of the day. The beauty of this is, as I add more day trading systems, I'll obviously be updating these videos, but at the same time, I can just add them to that same room. So if you are joining StatsEdge Trading because you want to swing trade, you can just mute the day trading room. If you're there because you want to day trade, you can mute the swing trading room. For me, who wants to do both, I have both rooms running, and I'm just not even really looking at the market until a price comes in and says, hey, take a trade there. And then we end up taking a trade. That's how it's removed the emotional side of things for me, is by simply, I don't have to think about this anymore. I load up every day, everything into the system. I'm hanging out in the chat room just like you guys are. When and if a trigger is hit, I look at it. If I like it, I take a day trade, and I'm taking them very, very small across many, many instances. And again, milking small edges over and over and over again. So if this is something that interests you and you're not a member of StatsEdge Pro, come give us a shot. This is the same thing we do from the swing trading side of things. So if you're watching this video and you say, I'm not interested in day trading, we have swing trading, we have long-term investing, and now we have day trading. Thank you guys for coming by and listening to me, and I'll talk to you soon.